Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about ITR Forms update for AY 2026-27, key changes every taxpayer should know. Introduction. The income tax return (ITR) filing process for assessment year 2026 to 27 has introduced several important updates aimed at improving transparency, simplifying compliance, and enhancing taxpayer reporting. The Income Tax Department has revised various return forms and filing procedures to accommodate evolving financial reporting standards, digital verification systems, and better tracking of deductions and transactions. These changes affect salaried individuals, business owners, professionals, investors, and even taxpayers claiming deductions under different sections of the Income Tax Act. Some modifications are procedural, while others directly impact how taxpayers disclose income, claim deductions, and file revised returns. Understanding these updates early can help taxpayers avoid notices, reduce filing errors, and ensure smooth processing of refunds. Major changes introduced in ITR forms for AY 2026-27. First, dual contact details now mandatory. One of the key updates applicable across most ITR forms is the requirement to provide dual contact details. What has changed? Taxpayers may now be required to provide primary mobile number, secondary mobile number, primary email address, and secondary email address. Why this change matters? The Income Tax Department is strengthening communication channels to ensure taxpayers receive OTP verification alerts, refund updates, compliance notices, e-verification messages, assessment communications. This reduces the possibility of missed notices due to inactive contact details. Benefit to taxpayers: faster communication, better security verification, reduced risk of non-delivery of tax notices. Second, dual address reporting option. New flexibility in address reporting. Taxpayers can now report primary residential address, secondary address. Possible use cases: this may benefit individuals living in rented accommodation while maintaining a permanent home, employees transferred between cities, students or professionals staying temporarily elsewhere, persons having multiple residences. Importance: accurate address reporting helps improve jurisdiction mapping, avoid document delivery issues, enhance verification accuracy. Third, revised return filing fee and extended window. Extended deadline for revised returns. The revised return filing window has reportedly been expanded significantly. New timeline: taxpayers may now get up to 12 months from the end of the assessment year to revise returns. For AY 2026-27, revised returns may be allowed until 31st March 2027. Earlier position: previously the revision period was comparatively shorter. Why this is important? This gives taxpayers more time to correct filing mistakes, add missed income, revise deductions, update investment details, correct bank account information. Late filing fee structure. Late filing fees under Section 234F continue to apply. Indicative fee structure: total income up to rupees 5 lakh. For them, the late fees is rupees 1000. For the total income of above rupees 5 lakh, the late fee is rupees 5000. Practical advice: even with extended timelines, taxpayers should avoid last minute filing because refunds get delayed, interest liability may increase, certain losses cannot be carried forward, loan and visa documentation may get affected. Fourth, Section 80G deduction reporting tightened. Donation claims need more transparency. Taxpayers claiming deductions under Section 80G must now provide enhanced reporting details. Additional details may include donation reference number, transaction ID, receipt information, institution registration details. Objective: the government aims to reduce fake donation claims, duplicate deduction misuse, unverified charitable claims. Important tip: always preserve donation receipts, bank transaction proof, PAN or registration details of the institution. Cash donations beyond permissible limits may not qualify. Fifth, Section 80GGC reporting becomes more detailed. Political contribution reporting strengthened. Individuals claiming deductions for donations to political parties under Section 80GGC may now need to disclose political party name, PAN of political party, transaction details. Why this matters? The Income Tax Department is increasing transparency in political funding disclosures. Important note: only non cash donations generally qualify for deduction under this section. Revised ITR filing deadlines for AY 2026 to 27. The filing deadlines for different categories of taxpayers have been rationalized. For salaried individuals, ITR 1 and ITR 2, due date is 31st July 2026, applicable mainly to salaried employees, pensioners, individuals with simple income structures. For business and professional taxpayers, ITR 3 and ITR 4, non-audit, due date 31st August 2026, applicable to proprietors, freelancers, consultants, small business owners. For audit cases, due date 31st October 2026, applicable where tax audit provisions apply. ITR 1 Sahaj gets major relief. Reporting of two house properties allowed, a major relief has reportedly been provided in ITR 1 eligibility. Earlier rule: previously, taxpayers with more than one house property often had to shift to more complex forms. New relief: eligible taxpayers may now report up to two house properties within ITR 1 subject to prescribed conditions. Impact: this is beneficial for salaried taxpayers owning one self occupied property, one inherited property, and one vacant property, one additional family property. Result: easier filing, reduced complexity, simpler compliance. ITR 2 Simplification for capital gains reporting. LTCG reporting simplified. Taxpayers reporting long term capital gains LTCG under certain provisions may notice simplified disclosures. Key simplification: a consolidated reporting structure may replace complicated date based classifications in some cases. Benefit: this helps retail investors, mutual fund investors, equity shareholders. Why it matters? Capital gains reporting has historically been one of the most confusing areas where taxpayers. Simplified schedules reduce calculation and reporting errors. ITR 3 key updates. ITR 3, generally used by business persons and professionals, has received multiple structural updates. Key changes include: first, simplified tax regime selection, clearer reporting for old tax regime, new tax regime switching options. Second, expanded F&O reporting fields. Additional disclosures may be required for futures trading, options trading, speculative income, turnover calculations. Why this is important? Tax authorities are closely monitoring derivative trading activities due to increasing retail participation. Third, better income segregation. Separate disclosure fields improve clarity for business income, professional income, presumptive taxation, capital gains, other income sources. What remains unchanged? Despite several updates, some important aspects remain stable. No major change in tax slabs. The fundamental slab structures remain largely consistent unless modified through the union budget. Basic return framework continues. The overall ITR filing process still includes PAN validation, Aadhaar linking, AIS-TIS matching, bank account verification, e-verification after filing. Why these changes are important? The updates reflect broader policy goals. First, better transparency. Enhanced reporting reduces tax evasion and mismatches. Second, simplification for genuine taxpayers. Simpler forms help honest taxpayers file returns more easily. Third, improved digital compliance. More transaction linked reporting enables faster automated verification. Fourth, faster refund processing. Accurate disclosures reduce processing delays and notices. Important tips for taxpayers before filing your return: keep these documents ready. Form 16, EIS or TIS statement, salary slips, bank statements, investment proofs, capital gains statement, home loan certificate, donation receipts. Verify AIS and Form 26AS carefully. Mismatch between reported income and department records may trigger notices. Choose correct ITR form. Filing the wrong ITR form can make the return defective. Avoid last minute filing. Early filing helps in faster refunds, easier correction, lower portal congestion risk. Conclusion: the ITR updates for AY 2026 to 27 indicate a continued move towards a more transparent, technology driven, and taxpayer friendly compliance ecosystem. While several new disclosures and reporting requirements have been introduced, many of the changes also simplify filing for salaried individuals, investors, and small taxpayers. The expansion of revised return timelines, simplified LTCG reporting, enhanced communication details, and broader ITR1 eligibility are likely to benefit many taxpayers. At the same time, stricter disclosure requirements for donations, political contributions, and trading activities highlight the government's increasing focus on data accuracy and compliance tracking. Taxpayers should review the latest notified ITR forms carefully and consult qualified tax professionals where necessary to ensure accurate filing. Disclaimer: this article is intended solely for general educational and informational purposes based on publicly discussed tax updates of official notifications and media reports relating to AY 2026 to 27. Tax laws, return utilities, filing procedures, and compliance requirements may change through subsequent government notifications, CBDT circulars, or legislative amendments. Readers are advised to verify the latest provisions from the official income tax department or consult a qualified chartered accountant for tax professional before making financial or tax related decisions. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.